Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, 27th of September. Today, we are going to cover a lot of things because markets are quite in the red and the rejections are everywhere. Every pop has been sold off, and we are reaching critical levels and peaks of fear on the market. Before moving to the charts and performing the technical analysis, I would like to review today's fundamental data in terms of 30-year mortgage peaking higher from 7.31 to 7.41. Higher interest rates for longer, really showing the applications going down into negative territory from 5.4%. Oh boy, mortgage rates are at unbelievable levels. And the other news that we got today is durable good orders month over month ticking higher and going in the other way as expected. Minus 0.5 was expected, and we got a tick in the positive, excluding transport also ticking higher, and excluding defense from -6 to almost flat. So at least that's good. But look at this EIA, crude oil, stock exchange. Look at this draw, minus 2 million draw. We were expecting almost no draw. So crude oil keeps taking the strategic petroleum reserve, a lot of stock on that, and I mean, supply has been lowering and lowering due to the manipulation that Russia and Saudi Arabia are doing. So the US's SPR, Strategic Petroleum Reserve, is taking on the stock. So the draws are going lower and lower, and obviously we are going to see that in the chart. The price is skyrocketing. So as I was saying, today is a really bad day for the markets, because basically, let's start on the daily. I was watching this the starting of the week. We got a little bit of bounce, but look at this clear bear flag or resolution towards the lower band of this consolidation back in June. So this is clear a bearish market. There's no other way around to this. If any other person tells you otherwise, just don't believe it. Look at this. This is clear as the book chart pattern, and the question is where this selling pressure is going to stop. Where are we going to see some kind of support? So on the 30-minute chart, we got yesterday's rejection weak candles at this level and support into the close, a little bit of buying. But look at where we are. We are in a huge descending trend that we tapped today right here. So on the 30-minute chart, it was quite beautiful to see the rejection on pre-market highs, this rejection, clear rejection, and then taking the opening range on the 5-minute and moving lower. This trapped a lot of longs that fueled the move down, and we are not seeing even a bounce on yesterday's 30-minute chart support, and not even on this 14,666 level prior's low of day. So on the 1-minute chart, I mean, this is a bearish trend. Lower lows, lower highs, clear as day. Nvidia is also clear as day. Apple minus 1%, entering the big gap on the daily and looking quite bearish, also losing ground on this ascending support. I mean, there's a lot of examples of weakness. and selling pressure and more weakness, more selling pressure. So that coupled with the fact that I was mentioning, look at this today's candle on crude oil, 4% on the day, buying and more buying and more buying and more buying. So this is putting a lot of concerns, a lot of pressure and fear on the next inflation readings, because crude oil is a big part of the headline inflation, not on the core, but this is going to impact huge on the next readings on inflation, and it's going to put a lot of expectations down in terms of progressing down, and the Fed is truly watching this. Apart from that, this is for inflation. In terms of economy outlook, look at dollar. Dollar is also putting a huge candle today. Huge candle. So dollar going up, crude oil, inflationary pressure up, also going up. Gold, look at gold. Gold is another pattern, another bearish pattern that is breaking down. So this is textbook patterns, guys. So basically, we are at a point in which we are correcting and the markets are retracing, not on a choppy way. They are resolving those setups. And I think if you were short in this market, there were a lot of opportunities for you to take these trades short. Dollar long is quite clear. Correlation with crude oil, correlation with gold, inverted correlation, so gold going down, a lot of money going cash into the dollar, and more outlook on the economy. The inverted yield curve. Yesterday I mentioned this, I explained why is this important. This is the 10-year minus the 2-year, the long term minus the short term. And basically what is showing is that the 10 years keeps going higher. So economy is at the 10-year outlook keep providing higher yields, but on the short term, Fed it's most probably reaching the terminal rate. So this is why this keeps going higher. And the big issue is the uninversion of this moving towards zero, because that means that rates are being cut, and because something is broken on the economy, something is sick. So the more this pushes towards zero, the more we are going to see cuts, and the more sick is the economy going to be. That's the concern, and everything is correlated. Stock market is feeling the pain. A lot of, I mean, this move is quite clear today. Correlations with dollar, correlations with yields, treasuries are also going down. And is there any risk on assets? I mean, there's no way. Look at this. This is the Russell. The Russell is clearly moving lower. Perhaps at this level, we might see some buying, but for now, we are continuing going lower, leaving gap downs behind. And also Bitcoin. Today, Bitcoin was, look at this move. I mean, this is why I don't trade crypto, because we put 2% and we retrace it in half an hour. In half an hour, we retraced back down almost 400 points. So risk on is just disappeared off the market, and gold is feeling the pressure of higher interest rates on a very technical setup breakdown to the downside. Dollar is pushing higher. A lot of people, I'm sure, are going cash. Banks are mixed sentiment, and energy is ripping, guys. October 2022 levels. And up here, this is 93. I was calling that. And the next level is 97. August 2022 levels. So I don't want to be that guy, but markets look really, really bad. Let's see the Nasdaq continuing chart, because the continuous chart, because I think instead of seeing all red, let's try to see where we are heading. So right now, as you can see, we have a little bit of a gap down here. This is a gap. This is one tap, another tap here. So the first zone that I would like to see is this zone, because the next one is going to be this. The next one is going to be basically this zone. So I don't expect any bounce directly. I want to see some structure towards move higher. But what I try to see, it's 14,400 to 500 on the Nasdaq, and on the S&Ps we are, let's check on the S&Ps we are past this gap and we are entering in a territory in which the next stop is basically, it's quite clear, quite visual, 4,240. It's also conjunction with the 200 daily moving average, so I think this is a spot to watch surely on the S&Ps. But on the Nasdaq, it's not that clear because we really moved higher than on the S&Ps. We did the lower high, sorry, and now we are entering into the gap. So this is a clear move, guys. I don't know where it's going to stop, but what is true is that I want to see some kind of look down below into higher, or at least inverted head and shoulders, or a consolidation going higher towards a critical level, things like that. But until then, just try not to catch bottoms, try not to be the first on the breakout, and just, if you don't want to short this market, if you want to be long, try to find a good entry to swing or for the long term. I think it's time to wait and look for consolidation in those levels. So 14,500, not today, 14,500 and 4240 on the S&P. Until then, well, I hope you are not suffering and feeling the pain. I hope you manage your risk, because these markets are really going down heavily on fundamental fears and also technical breakdown. So be really careful. And that's all from my side, as always. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recaps. I go through fundamentals, I perform technical analysis. So thank you for your support and your views on the channel. I hope you are learning a lot of things, because I cover a lot of markets that can provide you an edge and opportunities on several trading markets. So remember that discipline and risk management are key for your success and more in these various markets if you are trying to go long. So be really careful, be patient, and stay safe, everyone. See you tomorrow.